for joining the session. Earlier today, I reflected on, it's actually my 16th business trip this year to Vietnam. I'm responsible for 8 markets for GFT, and this is the market I spend the most time. Of course, we have our delivery center here. That's a reason to come. Great coffee, great food, great people, but there is really a lot of momentum in financial services. And it's really picking up this year. And really the face of financial services in Vietnam is changing. Why? So I think Eric was spot on this morning in his opening speech. The dynamic that we see, the momentum, basically the young generation and the average age of this population here in Vietnam is very special even in Southeast Asia context. We have a young, very tech-savvy, very digital native generation coming up who actually demand those seamless and instant digital services, those technology-driven innovations from banking. And to be honest, many of the banks have already invested in digital transformation here, and they see the measurable improvements. They see that there is higher customer satisfaction, stronger competitive position in the market. But having modernized the channels and not really having focused too much on the innovation of the services and the products. But this young generation and the whole market is actually looking for product and service innovation as well. And here we have a gap because the outdated legacy systems in the incumbent banks, they are still there. And even if the business comes to the IT and says, I want to launch this very specific, targeted, segmented service to a specific group, IT sometimes has to say no, because we have those legacy systems. We don't have the infrastructure yet to build upon. And the younger generation is also a little bit different when it comes to engaging with banks, when it comes to switching more to a new proposition, to a new brand, for example. And here, it's very important that business and technology work hand in hand together to make that happen. But why now? I think there are a few factors. Yes, the strong market demand, very clear. I think we heard it this morning. We're all on the same page. We feel the energy. We feel the dynamic. But there's also a very supportive regulatory environment here in Vietnam. When we set up GFT Vietnam about 5 years ago, we witnessed every year that the regulator is taking really measured steps, but embracing innovation, not stopping technology innovation, but encouraging really the transformation journey of financial institutions and being very, very supportive. So that's great, but there's also limited foreign competition in Vietnam. There's no Revolut here. So the race for the leadership of digital banking services and digital banking leadership is amongst the incumbents, amongst the traditional banks, amongst the players in Vietnam at the time. But that race, that's already on. One example, Cake Bank, digital bank, broke even already last year in the 4th quarter and is profitable. That just shows us the race is in full motion already. And of course, there is a massive market opportunity in the rural, underserved areas, but also the SME segment. The SME segment is a backbone of the economy here that is underserved. So great opportunity for the business. So when I put myself into the shoes of the banks, so that to embark on that journey of transformation, all of the banks have to face the same challenges, those drivers, yeah, the flexibility, the hyper-personalization, these outstanding customer experiences, fast time to market with new products, scale. In a growing market, you need to scale up, scalability, quick response, and rapid innovation. So how to get there? From the why a little bit to the how. The enablers are both technology and business enablers. Of course, the digital cores, customer journeys, digital customer journeys, a mobile-first approach, public cloud, of course, AWS, making this happen, the innovation. Migration or not, but then also really more from a business point of view, what segments, what more niche segments, what new operating model, new business models and new products and services can be leveraged to win that race of being the leader in digital banking. And there are different approaches, from a channel revamp to mainframe modernization to really a core replacement and then a dual core strategy or really a greenfield digital banking approach that banks have to decide and choose from, and that's a difficult choice to make. So when we double-click a bit on the how, there are two, I would say, main themes of enablers, what we would call for the next generation of digital banking. Number one, it's really the digital journeys that are shaping the client experience, that are creating that seamless, that instant experience. A major role, obviously, plays the omni-channel experience across mobile and web. But AI, and I think we heard that earlier in the speeches as well, is a massive enabler for that. Yeah? For personalization, for fraud prevention, for instant payments, for many things, that where we can utilize the data to create a better and more seamless customer experience for the end client. But so the modern core banking platforms, on the other side, are really the foundation for a future-ready bank. So when I say modern core or neo-core banking modernization means enabling real-time processing, scalability, and flexibility. That is really supporting rapid development and almost looking at it as an innovation engine for new products, rather than the traditional idea of a core banking system. And of course, facilitate, integrate the third parties that are out there. We have so many now, bring them in on the foundation of a cloud-native architecture with the partner AWS for the security, leverage the availability, and of course, leverage the cost efficiency. So those are on the how, the two main enablers that we see. So GFT, we are an implementation partner for financial services, and we are being considered a technology leader for digital banking. So digital banking is in the center of our offering, and we are glad that we are being recognized as a leader. We've been investing for about the last 10 years into capabilities, expertise, framework, practices, COEs, accelerators, so many things. But more important than that is doing it. And we've done it so many times. We've been doing it in so many different countries, in Southeast Asia, in Asia, and Vietnam, to launch greenfield digital banks, to work with incumbent banks on brownfield implementation, and going on the journey with the banks to transform and to make them the leaders in their space. When we look at GFT from a digital banking holistic perspective, we look at it 360. Yeah? So it's not really a pure technology play for us. Yes, we are an implementation partner, we have technology expertise, but the business side is equally important. And we really look at it from the core processes, the operations, the business services, and everything that's the underlying data and analytics, the external ecosystem, the channels, and of course, the onboarding, the front-end services. In the centerpiece of it, and I would say the underlying enabler is really the cloud infrastructure. On top, the digital cores. The digital cores, some examples here in the middle, or the bank as a service platforms. So in Asia, we can see about 70 plus greenfield digital banks are calling Asia their home. That's today. There will be some growth, maybe 100 in the next 100 plus in the next 5 years. So I took the screenshot here from the banker who looks at the top digital banks in Asia. There's 3 things that are quite interesting. In other parts of the world, we see really startup banks like a Nubank or Revolut or Monzo taking a market share. That's not the case in Asia. We have 2 other patterns that are emerging here. Number one is basically the super apps, the Tencents, the Alis, the Kakao banks, who are using their massive client base and bring financial services into their ecosystem and leverage that. And that's been, in pretty much all of the market, quite successful. But there is another part. Because what's a difficult part for a greenfield digital bank? The incumbent banks have invested and capitalized and built trust over decades. And that's the most difficult part for a greenfield digital bank to gain. So when we look at it, there seems to be kind of a winning proposition to have an independent technology stack under the roof and under the backing and under the support of an incumbent bank. And that's a little bit the Vietnam approach to digital banking, because all the digital banks that we have here, they're all backed by an incumbent bank. And that seems to be sort of a winning combination. Have the flexibility, standalone independence, but still capitalize on the trust of the incumbent bank. We have two examples of GFT and AWS customers. They've been customers for quite a number of years now, from the day one to the launch to today. There are two nice videos that AWS and us built, the QR codes if you want to watch them after. But what's standing out here? So both of those banks have Standard Chartered as their mothership, so to speak. Yeah? So they capitalize on that trust of an incumbent, of a traditional bank. But both of them built standalone, cloud native, with a Neo core, with full autonomy. And their prerogative was really to build the best customer experience in the market. So that's the mandate for both, and we see the success. In Mox, when they launched under their own digital banking license, they took a lot of market share from the get-go. And in Singapore, even more so, they reached 1 million clients, being the fourth largest bank in Singapore in a record time. They're even called the fastest growing digital bank in the world for that short ramp up of up to 1 million, now over 1 million clients. So take those examples in that context. We have some more, but they reflect a great customer experience, but they reflect also something else. It's not only the customer experience, it's also the products and the services that are coming to the market. They are new, they're fresh, they're addressing a new need. So Trust Bank, for example, they came by the launch, they came with the 0 FX credit card. Tremendous value. You go across the border, you pay 0 FX when you use the credit card. I'm using it all the time. They also have a super engaging, very gamified loyalty program. A lot of people in Singapore love it. It's a part of the ecosystem. They're leveraging the ecosystem, and that creates really a lot of customer loyalty. Mox Bank took a bit of the different approach. They addressed the millennial segment, and they launched the numberless card. Everybody was quite curious what it was at the launch, so they created that sort of excitement with a new product rather than only a millennial appeal, look and feel. It's really down to the service and the product. Rice Bank in Malaysia, under Al-Raji, first to market Islamic products. And then here, closer to home, Wiki Digital Bank with a Wiki Go, where we connect the digital banking with the network, the ecosystem of travel, with Vietjet and travel insurance, for example. Very seamless, integrated into that experience as well, in that more product mindset. So, what are the approaches for the greenfields? We break it down in about 3 different approaches. So many of the examples I just showed you, they followed the approach number 1. 100% built from scratch. You have the maximum flexibility. Yeah? You can build whatever you like to build, very customized for the market, for the needs, for the engagement. The cost obviously is higher because we have to invest into the customization. It takes a little bit longer to go to market. And of course, the core banking cost is somewhat in the middle. When we take the sort of middle ground, that's more of a platform from scratch. So we build from scratch, but we use a platform, for example, Audax, where a lot of the components are already pre-built that you can reuse. It's not always needed that you have to build everything from scratch. Sometimes it's actually not the right proposition. So that's the middle ground where we have also a relatively fast go-to-market, lower cost at least for customization, and still a relatively high degree of flexibility. And we see that momentum picking up, especially in Southeast Asia, with platforms like Audax. There are others, but that's one example. And then comes what we can call almost a turnkey bank, when we take an existing bank stack that's been proven. So Engine is the proposition that is basically used from Starling. So Starling, very, very successful bank in the UK. They brought that stack, and they brought it into the market. GFT built in Eastern Europe one bank called Salt Bank with Engine. Mox is doing exactly the same thing. So you can buy, license, or buy the Mox tech stack, use it for your market, and you have, well, super fast go-to-market. Yes, the cost might be a bit higher. Customization cost very low because you don't have to do much. And the flexibility is a bit limited, so you really take what is important for your market, for your journeys, adapt it to your local needs, but you have a stack that you can go live very, very fast and with low risk. So that's the digital banking greenfield approach. But many of the banks in Vietnam are already embarking on what we call the brownfield approach. So GFT has been involved in many of the tier one dual core projects, core migrations, and implementations. So across the globe, many of the financial institutions are already on that journey. So you're not alone when you start on that journey. GFT has been doing that for actually quite a number of years, but we see a lot of momentum picking up that we do these kind of transformation programs within the bank, under the same roof, and transform within. Here, I think we can differentiate more or less two broader approaches. So the one is leveraging as much as possible from the current technology. Yeah? Minimize the cost and shared service and shared infrastructure. The challenge obviously is we stay to a degree on the common tech stack, on the legacy tech stack, mostly in the back end. And well, if we want to have a full core replacement, the migration might take a little bit longer from before the launch. But there is an approach that's emerging now, and many banks are shifting more towards the right-hand side of the slide here, which is what we call the adjacent or dual core architecture. Here, it's pretty much you build a new vertical tech stack end-to-end within the bank. There's not really a migration needed from the get-go. I'll come to that. The one thing that's in common is the general ledger and the reg reporting. So you can use the same banking license, we can refresh a little bit, but it's really focused on launching new products. So take one vertical, maybe use that as an innovation engine to launch new products. And then step by step, so you can decide to migrate to that new proposition and new tech stack in your own pace. De-risk it. You can choose to go for a big bang, that's okay. You can choose to go a gradual migration and put one product after another there, or you can decide actually some of the products, I just leave it in the legacy. So you have a relatively broad spectrum of flexibility, and that's a bit, I would say, the trend where the industry is emerging and the discussions that we see and that we're having at the moment. So when it comes to the fourth generation core, yeah, take pictures, then I get a lot of phone calls from our colleagues from the core banking systems. So we cluster that in really the tier ones and tier twos, and then versus the tier three and tier fours. So what we see, obviously, all of them have a retail banking proposition. That's clear, right? Some are more suited for the larger banks, and some are actually more suited for come with more functionality, are a bit more SaaS, and are more suited for the tier three, tier fours. Many of them already come with a quite rich roadmap or rich functionality on SME banking. But where we see, from my perspective, not too much variety or not too much choice is really on the corporate side. So on the corporate side is where we have the very sort of naked core banking systems like 10x and Thought Machine, bringing in the digitalization into the corporate banking. To be honest, that's also the field where we have seen the least adoption of core banking to date. But it doesn't mean that there is a big market for that. There is an increasing market demand on that side of the business, where the requirements are certainly much higher on the corporate banking side than on the retail banking side. However, not for every bank, not for every proposition, not for every go-to-market, 50,000 TPS is required. So let's be honest, there is a differentiation for different tiers and for different market segments, and how many segments you want to cover at once with one 4th generation core, how we can go about that. So clearly the architecture, the functionality, the modularity and the flexibility, and then of course also the operating model, SaaS and so on, are playing an important role for the consideration of the choice of the core, because the core is really the enabler, but everything around it is actually equally important when embarking on that journey. So just choosing the right core, good, but that's just the beginning. It's the enabler to go on that journey. It's the enabler really for a successful implementation. Those are mostly multi-year journeys. They are not risk-free, as we know, but there is a big reward waiting at the end of the tunnel. So we try to consolidate a little bit I would say 7 considerations when we do the implementation. And that's purely based on our own experience. So governance, leadership and risk management, business and cost strategy. Then we heard earlier the customer-centric design, of course, partner ecosystem, the talents and the team capabilities, and then the modern technology and system abstraction, the architecture in a way, and then the operating model, the ways of working, and the processes. Let me quickly double-click on each one of them. Just a few takeaways. So setting up that sort of governance, and in a way that we have the right structure, the right control tower, the essential ways of working established, because they will change when you embark on that program, the right leadership principles, and also facilitating the cross-functional team alignment is absolutely key. So we see the more discipline the governance brings into those programs, actually the more we de-risk. It sounds nice, right, obviously in the theory, but we see in the practice, if you don't do it, that's where it derails usually. And it requires, of course, very strong leadership principles and leadership, because this is nothing that you do on the side. It's not a side project. This requires top-down management buy-in, support, attention, focus, where we can actually be able to make fast decisions, because there will be many decisions on the way. And the most important in the leadership part is actually the alignment between the chief product officer and the CIO. If that alignment comes into a wrong balance, then we're building, for example, tech for tech, right? Totally waste of effort, time, and money. That alignment is really a key factor of the success. And risk management. These programs are not risk-free. It's not about avoiding risk. It's not about making ways around risk. Let's take risk, but let's optimize it, and let's take risk where we can get some reward. Let's take risk when it's benefiting the business. Well, cost, big topic in this one, and it could be literally everything, right? When we are scoping these kind of programs, we try to structure this a little bit, right? We have these scales here where you can move according to where the bank stands. So where's the transformation scope, where's the product migration scope, the sophistication of the product. Is this a commodity or is this a highly customized product? What about the business processes? Is that minimal process changes or is that a lot? Then the integration complexity, of course, drives a lot of integration efforts from our side. Then the coexistence architecture. Different banks, different maturity, different stages of how much they have invested to date. Drives, of course, the cost, and then the infrastructure. An established cloud foundation, very different story, to basically starting from zero. And then, of course, when it comes to client and data migration complexity, how many brands, how many entities, how many products, what's the complexity of the products, or is it very simple, just one product moving from right to left with the data? So with all of those variances, we come to a different sort of overall cost But we were trying to break it down to make it a bit easier, and we have established that tool to support our client base. Number 3, I think we heard about it earlier. So the customer-centric design is absolutely a key success factor for digital banking initiatives and for the implementation. So it's really about to the previous speech, to the empathy and the deep customer understanding, right? The deeper the customer understanding, the more user knowledge that we have, and the more customer-centric we become, the better we can prioritize the roadmap. Because that's always the question, right? The better we can align the business, the better we can personalize, and we can find, well, the cross-functional collaboration. So, in a nutshell, the feedback, the iterations, the simplicity to basically drive value is key, and really getting to these customer knowledge reservoirs, how we call it, is a key success factor. Then, AWS calls it the power of 3. I like it. Most of the time, the question is make or buy. When it comes to digital banking projects, the answer is not always make, because there's so many good ISV solutions out there that can be leveraged. There are strong, resilient, much faster product roadmaps. Don't build everything in-house, not needed. Only build what you need to differentiate yourself in the marketplace. And that rich ecosystem, that is AWS's ecosystem, that is our ecosystem, must be also the bank's ecosystem. And working together, and that's a great benefit of today, is working together and bring that ecosystem together. We really see that provides a tremendous value on that journey of making a digital banking implementation a success. Focus on the differentiator. Usually, when it comes to talents and capabilities, there is no one-size-fits-all. Sometimes we see very strong technical capabilities within the bank, but mostly there is a strong focus on run. Make the bank resilient, stable, and when it comes to a massive transformation program like that, especially at the beginning, there's a tremendous value of having an implementation partner who has done this before, and actually has done this multiple times in multiple countries before, to focus on the build, to get it ramped up fast, rather than trying to take the support from a partner with expertise, and then relatively fast also embed the teams of the bank who will run the future stack and work together, right? In a kind of shadow mode, mix teams, and build these future skills and capabilities throughout the build phase, and then get into a transition. Let the implementation partner ramp down in a way. Of course, you can choose to keep them, but in the end, you want to get to a stage where you have the self-sufficiency and where all of the capabilities are in-house. Normally, it takes time, and if we want to have a fast go-to-market, that's the way that we've seen. That this kind of wave is what we've seen as the best practice. If the wave comes a little bit later, so if you start to get some expertise in later, it's actually becoming more costly, because you have to sometimes redo things, or you embarked on a journey that you could have avoided. You actually pay sometimes a lesson learned. Well, then really number 6 is we think about it like a holistic end-to-end, more product view. Not horizontal dependencies that we tend to have. No, we go complete vertical. End-to-end, bank functionality, product view, from the experience to the processing with the microservices around the products, to the record layer, to what we call the infrastructure layer. So really vertical view and really cool ways of working implemented in that sort of abstraction on a vertical approach. That's a key success factor, and the more stringent we are here, the better. Last but not least, of course, we are a believer in agile delivery, but we are not a believer in endless delivery, which can happen if we don't have the right goalpost, if we don't have a clear scope and boundaries set up for ourselves. So we do believe in a clear, structured program with governance, with a cost envelope, with a scope, and with a timeline. Within that, we can apply the iterative process. It's the combination of both. In summary, those are 7 considerations that you can take away for the implementation. We can double-click on all of them. We have our booth here, so you are invited to meet us at our booth. We're a global company. We work in 20 markets. We are very, very passionate about digital banking. We are believers in the technology talent in Vietnam, and we are proud to be part of the journey changing the face of financial services in Vietnam. Thank you.